In October 2025, I bought 1,000 shares of a single stock in one click at $29.79 a share, and I felt smart doing it. I told myself this was my last chance to get it in under 30 bucks. It then proceeded to get cut almost in half. That stock is SoFi. I'm down on it. And here's the part that's going to sound insane. I'm still buying it every week I can on purpose. So this video is me explaining completely honestly why I keep buying a stock I'm losing money on right now, what I got wrong, what I think everyone's missing, and the one real risk that could blow this whole thing up. Real quick, I'm not a financial advisor. I'm a guy who sold winners too early and bought tops out of FOMO. So maybe take that as a warning label, not advice. This is just me showing you my actual portfolio and how I'm thinking. Do your own homework. Let's go back to the beginning because the start of this is embarrassing in a very normal way. I bought my first SoFi shares back in May of 2022. 200 shares, around $5. And I'd love to tell you I did this deep, brilliant analysis, but I didn't. I bought it because a buddy of mine from back home would not shut up about it. He'd put real money into it. He was hyped, and I caught the FOMO, plain and simple. And you know what happened right after I bought? It went down. Then it kept going down, and I did the classic beginner move. I held, not because I had conviction, but because I didn't want to take the loss. Selling would have made it real. Now, here's the thing that keeps me up a little at night. While it sat under $5, I should have been backing the truck up. That was the gift, and I didn't take it. Lesson number one, the moment that feels the scariest to buy is usually one you look back on wishing you bought more. Fast forward to 2025, SoFi finally wakes up. It runs, and now my FOMO flips to the other direction, the worst kind. This stock's in the high 20s, and I start telling myself a story. This thing's going to 50, maybe 100. Get your shares now before it's gone. So I buy in the 27s, the 25s, the 26s, and then I drop the big one, 1,000 shares at $29.79, because I was sure it was my last chance to get under 30. It was not my last chance to get under 30. It wasn't even close. The stock rolled over and slid all the way back into the teens. And look, I have zero problem admitting it. I bought the bottom out of FOMO in 2022, and then I bought near the top out of FOMO in 2025. FOMO got me coming and going. If you've done something like that, you're not an idiot. You're an investor. We all paid the tuition. So why am I not running for the exits? Why am I adding? Here's what flipped for me. For a while, SoFi would do the maddening thing. They'd report earnings, beat expectations, grow revenue, and the stock would go down. I was so frustrated. How do you beat and drop? But somewhere in there, I stopped watching the price and started watching the business. And the business kept growing. Revenue up, profits showing up. The actual company was getting stronger while the stock got cheaper. So now, with it back under 20, I'm doing the opposite of panicking. I'm dollar cost averaging down. My average is sitting around $21.50 now, and my honest hope, and this is the part that sounds backwards to most people, is that the stock stays under 20 for a while. Because every share I buy down here drags my average lower. Think about it like this. If you love a brand and it goes on sale, you don't get mad you stock up. If you believe the company long term, a lower price isn't a loss. It's a discount on the shares you were gonna buy anyway. 5 years from now, I might look back and be generally thankful SoFi dipped back under 20 and gave me a time to load up. That's the whole reason I do this investing in public thing. I'm putting my trades and my thinking on the record right now, so future me can look back and see exactly how present me thought about it, win or lose. Okay, but I like the company isn't a thesis. Let's get into why I actually believe in this with real numbers. We all know SoFi is profitable now. This isn't a hope and prayer story anymore. In their more recent quarter, they did about $1.1 billion in revenue, up 45% year over year, with net income in triple digits. And their earnings are climbing fast. They did somewhere around 38 cents per share in 2025. The estimate for 2026 is about 60 cents. That's more than 50% growth. And 2027 estimates are pushing into the low to mid 80s. Here's the patience math, and this is the part I want you to sit with. Let's say I'm wrong about the stock popping. Let's say it's still stuck at $20 at the end of 2027. With around 80 cents of earnings, that's a price to earnings ratio of 25. 25 times earning for a company growing earnings 50% a year. That's not expensive, that's cheap for that kind of growth. You guys know my framework. Every investment has a job. My ETFs do the boring, heavy lifting. SoFi's job in my portfolio is different. It's my one big swing. My bet on a fintech that's trying to become a full digital bank, and it's actually executing. And here's the dream long term. Right now, SoFi should be plowing every dollar back into growth. That's correct. I don't want a dividend yet, but a lot of financial companies, once they mature and stabilize, start paying a 1 to 2% dividend. What I want is for SoFi to grow up from a pure growth stock into a dividend paying growth stock. That's the holy grail. You get the appreciation and it starts paying you to hold it. Now, that's years out, but that's the destination I'm buying towards. Now, I'm not gonna sit here and pretend this is risk-free because that's how you lose trust. So let me tell you the thing I actually worry about: dilution. Here's dilution in plain English. Imagine you own a slice of pizza, then the company decides to cut the pizza into more and more slices to raise money or pay employees. Your slice didn't disappear, but it got thinner. You own a smaller piece of the same pie. That's what's been happening with SoFi. Their share count has gone from somewhere around 800 million shares a few years ago to roughly 1.3 billion today, growing in the mid-teens % a year. That's the answer to the riddle from earlier. How does a company beat earnings and still drop? If they keep printing new shares, each share is worth a little less of the company, and that can cap the stock even when the business is winning. No investor likes being diluted. You might remember the Facebook story. The one of the founders, Eduardo Severian, watched his ownership stake get crushed down to a fraction of what it was. Now, that was an extreme situation with bad contracts and a lawsuit, totally different from what SoFi is doing, which is normal growth stage stuff. But the principle is the same. Every new share they create makes your slice a little smaller. So I watch the share count like a hawk. The other thing people throw around is that SoFi burns cash. On paper, yeah, but a huge chunk of that is because they're a lender. Making loans literally consumes cash up front. That's the business. So that one doesn't scare me. Dilution is the one I actually keep an eye on. Here's my latest honest confession. There's a part of me that watches these AI stocks rip 50% in a month and think, am I missing it? Am I being slow and boring while everyone else gets rich on the rocket ships? Maybe. But nobody has a crystal ball. Those same stocks that go up 50% in a month can go down 50% in a month as well. And here's the thing about me. I'm an entrepreneur. I already carry a ton of risk in my business every single day. I don't need my portfolio to be a casino too. SoFi, for me, is the calculated bet. A profitable, fast-growing company at a reasonable price that I can buy patiently over years. That's not boring to me, that's control. So here's the plan I'm putting on record. I want to own 10,000 shares of SoFi, and yeah, I think there's a real shot that this hits $100 a share in the next 5 to 7 years. That's my goal, not a promise, and definitely not advice. But it's on video now, so you can hold me to it. This is what investing in the public means. If I'm wrong, you'll watch me be wrong. If I'm right, we documented it together. So tell me straight in the comments, am I being a patient investor here, or am I anchoring to a loser and missing the AI rockets? Team patience or team momentum? I actually want to know. Subscribe to follow this position. I'm updated as I keep buying, and I'll see you in the next one.